The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the Morgan Report for the week ending 11 July 2025. Well, it's all about silver today, isn't it? We're looking at Kitco website, and as you can easily see, we've had quite a rally in the silver price. We went from the 37 level basically, and right now trading at about 38.5, 38.45, a nice big climb. And of course, that's making a lot of silver investors happy. And I just want to point out a couple more things. If we look at this chart from a longer term perspective, going back, this goes all the way back to 1935, we can see silver has a propensity to spike, which you do when it falls in the silver market for any time at all knows that. But here we have the 1980 Hunt Brothers spike, and here we have the 2011, last day of April, early May, 2011, where I called that top. Others did as well. And now we're starting to go a little bit parabolic again, but it's more sustainable this time. And of course, we've not hit that elusive $50 mark, which in nominal prices has pretty much double topped here, as you can see. But going further, I do think that if we get there, and I'm pretty sure that we will, that we may stall out there for a while. Time will tell. I'm not that concerned one way or the other. I do think that even if we do fall back from that level momentarily, it won't take long to regroup and push up through it. And once that happens, then we'll be in a place silver has never been in before on a nominal level, again, $50, and it will be beyond. There's really no upside resistance from that point forward, which means everyone that owns physical silver will be nominally profitable. And on a real basis, it depends when you got into the market and what your inflation-adjusted price would be. Regardless, it'll be very interesting once we reach that level. Such a big move today, highest price in over a decade, and the momentum is quite interesting. I want to go to my Twitter account and point out a couple further things about silver and the metals markets as a whole. So the first thing I want to point out, this is at Silver Guru 22 on X or Twitter, however you want to talk about it. This came from Bob Coleman just a little bit ago. The silver EFP, exchange for physical spread, just went vertical, up more than 100% a day. And my comment on that was, do we see stress in the silver market? Obviously we do. I think we're going to see a 40 handle here pretty soon. It'll be interesting to see with one of the biggest short positions that's been in recent times, what happens. Will the shorts with unlimited money, or unlimited fiat, I should say, unlimited currency, continue to add to their positions? Or will some of them buy back and force the price even higher? Very interesting times. This is, again, recent post for today, Friday the 11th. And this is an interesting one most people probably wouldn't be aware of, but the Pentagon became the largest shareholder in REE's, rare earth minerals, MP Materials, and the shares surged 50%. You can read the whole article there. I just spoke about that one. China's metals processing dominance threatens Western supply chains. Very important article for anybody that's investing in these markets. I suggest you take the time to read that full article. Threw copper in here. We like copper, not as much as the precious metals, but copper has had a surge. You can read this article from Kitco. And then a little bit about the platinum market, which we've been early on, and it's worked to our advantage. Platinum actually year to date is the best performing of the precious metals, and it was nothing but sideways and flat for a very, very long time. It built that huge base, and now it has launched off that base. And there's a few articles here on my X that you can read regarding platinum current and projections for future. This is one. The rally in platinum price is 40% for the 2025 market. It goes on beyond that. Another one from Kitco on Sprott Silver ETF hits over 100 million. And this one from the Silver Institute on state of the silver market. And a couple more here. Gold remains well supported above the 3,300 level. And I think the story for the rest of summer is going to be the white metals, not gold necessarily. I do see gold support at 3,300 or thereabouts. But I still believe that we're going to see gold go sideways, more or less, could get to 3,500, could go above that. But I think it's going to go sideways in a trading range for a few more months at least, and possibly longer than that. Time will tell. I'm going to leave it at that. Keep this to 5 minutes this week. I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.